Welcome to the Condo Insider Show. I'm your host today, and I will be co-hosting with Krista Stadler, someone you're all very familiar with. And we're going to be talking about the state of the industry as it pertains to the real estate market and mortgages. I would also like to announce today I will be conducting or co-hosting this show with Krista as my last show before I go on a hiatus. Fortunately, I'm going to pivot and venture off into the real estate market, and I'm really excited about that, which is why I'm really excited that we also have our friend Kristina Steuer on the show today. And I'm going to let her fix that in a moment. And she's going to kind of piggyback into the real estate market as it pertains to mortgages and why this may be a good time for some of us to kind of jump in and take advantage of those low interest rates. So at this time, I'm going to go ahead and introduce Kristina and let her say hello and tell everybody a little bit about herself.
Hello, everybody. Thank you so much for having me on the show, Krista and Cheryl. I know you both very well, and we used to work together, and that was very exciting. I'm excited about our new venture together on the show today. So I am with Academy Mortgage. I'm a loan officer, and basically wanted to talk to you today about why you might want to consider refinancing and taking advantage of the low rates. So as you know, you might have heard, it's pretty much everywhere you look that rates are at historic lows. Here we have a chart that's showing kind of the 30-year trend on the fixed conventional mortgages. So as you can see right now is pretty much the lowest we've seen in a really long time. So just some of the things that you want to consider when you're looking to refinance. Some of the benefits are lowering your monthly payment. That's always a good thing, especially nowadays. You want to hold on to as much cash as you can get. The other thing is you can also do a cash out refinance. So if you have college coming up for your kids, or you want to put a pool in or do some sort of renovation, that's going to be a good time to do a cash out refinance, especially for all of you that have owned your homes for a while and you have a significant amount of equity. And then if you have a lot of credit card debt, or you have car loans, you have student loans, you can also think about consolidating your debt. So you can pay off all of your debt and roll it into your lower monthly interest rate. So that's another thing to consider. And then, if you plan to stay in your home for the next 5 to 6 years, I think it's 100% worth looking to refinance. Sometimes even just a point difference will make a big savings. And so, I'm here to help if you have any questions there. I can also put together a spreadsheet that can show you your different options, and it will break down all of your costs so that you can see if it's a good idea for you and your family.
Thank you, Kristina. Krista, who is also co-hosting with me today, I know you had a number of questions for the two of us, and so I'll just kind of segue into you asking those questions and things that customers may have been asking along the way. So come on in, Krista.
Well, I just have a question, so if someone's in a situation right now, which I can imagine happening, it's COVID, they've lost their job, they have equity in their home, but they have it at a higher interest rate, and they come to you and they say, hey, Kristina, I really need to refinance my house because I've got to get that payment lower so that I can afford it right now. Tell me, they may think that it might be easy, but tell me what the situation is, especially if they've already gotten behind in their payments.
Yes, so right now what we're finding is, a few months ago, you might have gotten a call from your bank or your lender asking if you wanted to place your loan into forbearance. And while that was, a great idea, and maybe that was beneficial to some people, what we're finding now is that if you have your loan in forbearance, you need to bring your loan to current. So what that means is if you skipped 3 months of payment, you're going to have to make the payments and bring it up to current before we can refinance. And then in addition, if you're out of work right now or you're furloughed, unfortunately, we're going to have to wait until you return back to work. So there's a few factors that definitely, unfortunately, with today's situation, especially in Hawaii, I know that, we have a lot of people that rely on tourism. And so, we're having that issue. What I do recommend, though, is we can get it all set up. And so that when you do return to work and you do get that letter, let's say from, the hotel that they're going to be reopening, we can actually use that to proceed forward. So, definitely there's a lot of work that goes into it before, we can process it. So I think it's worthwhile to kind of do the nitty gritty stuff, get it set up so that hopefully
quite
when
a process.
Back to normal.
Yeah. So if they are 3 months behind, and I don't know if this is a question that you would answer, so if it's not, I apologize, but is there some type of a repayment program they can put together? I mean, let's say they go back to work, but they have a $3,000 mortgage, and so they've gone 3 months and they're $9,000 in the hole. Are there programs that the companies are putting together for folks to help maybe keep current on the current monthly amount, but pay back the debt?
Mm-hmm. So what we're seeing, or what most of the banks and mortgage companies are allowing, is for you to tack on those 3 months on the back end of the loan.
Oh.
So basically, on year 27 or 28, you can, tack on those 3 or 6 months that you did not pay. So every company is different. You want to make sure you check with your servicer. So, if you're with Academy Mortgage, you talk to Academy, whoever's on your statement on the top left. You should be able to call them and ask them, because everybody has different kind of options there. I know some people might have a balloon payment, which is, you have to pay it all back at once, which, for some people that would be a little tough to do. So definitely make sure to check with your mortgage provider.
And I would imagine communication is the key, just like in my business and well, anything, but keeping in communication and not just stopping payments, right?
Right.
Yes. Let them know what's going on.
Not good.
What may be a given in all this, and I don't know, and maybe Kristina, is with all of the forbearance and everything you guys were just speaking about, I'm assuming that means that the banks and finance companies and the like are there's doing minimal to no reporting to credit bureaus. Like, how would this typically, we know how it would typically affect your credit, but I'm under the impression that everything's kind of on hold given our COVID economy, if you will, as it pertains to your credit rating. That's going to have an impact on whether or not you qualify.
Right. And so I think, I know we checked with a few companies locally, or a few banks, and they told us that, your credit will not be affected. So it really, I think, depends. I mean, I would hope that people's credit would not be affected, but, we're kind of like living in unprecedented times. And so they're making it up as they go. And so I'm sure there's going to be a whole plethora of information that comes out in a few years that talks about why that was the bad idea or so.
Yeah, every day is different, and we just don't know how things are going to play out.
Right.
When do you, I'm so sorry. It's hard with 3 of us because we're trying to jive here, but if you've got a mortgage in place, and you maybe instituted the beginning of that mortgage 2 years ago, and the interest rate was close to 5%. I mean, at what point do you look at the current rate and determine whether it's worth going through the refinancing process or not? So
that's a great question. So right now we're kind of right around the 3% mark. So now it'd definitely be a good time, because we're talking a big jump in payments. I've had clients that I've helped refinance, and we've gotten they're saving $300 a month, and I think they're at like 3.75, and we brought them down to 3.25. So just right there, that's very small, that's not even a full point. So if you're going from 5% to 3%, there's going to be a ton of savings, which is really beneficial nowadays. And then, of course, your interest rate is driven by your credit score. So if you don't have a good credit score, then your interest rate's not going to be as great. And then also there's going to be different factors, such as if it's an investment property. So investment properties have higher interest rates. So that's what we find, right now they're kind of like in the 5%, 4.5% range, which we could still get down for sure. So I would say now would be a great time.
All right. That's very good information. Yeah. And somebody can just call you and kind of lay out their situation before you even get started to see if it's even worth it.
Yeah, what I recommend is if you're interested in refinancing, if you could send a copy of your mortgage statement, we can pretty much pull all of the information off of there. We don't need to run your credit. We don't need to, kind of jump the ball just yet. We can get all the information off of your statement. I can put together a comparison report. And if you kind of have a ballpark range of what your credit score is, I can 100% break down the numbers, and everything's super transparent. You can see on there the closing costs. If you wanted to buy the rate down, I can put on, the different options there. So it's pretty neat, the technology they have today. So.
Do we have any idea, and I know the answer to this because I can see the trends in real estate, we really don't know how long those interest rates are going to hold. So I would say now is the time to take advantage of those. And even on the market side of real estate, there's still a good amount of inventory. If you compare where we were last year, of course we're down, but if you compare where we were in May, we're up in terms of sales. So it's a good time to take advantage of those really low interest rates. No one knows what fourth quarter is going to look like. And so it's a good time to kind of jump in. If you're a buyer, it is a buyer's market. But if you're a seller, it's a good time to jump in as well, because right now you can probably get the most bang for your buck in terms of selling your house. The value may fluctuate a little bit fourth quarter. If you're buying, and even if you buy now and those prices do fluctuate, the good thing is if you are an owner occupied, you don't have too much to worry about typically, because as we all know, the longer you retain real estate, the value is going to go up. If you're an investor, of course, I would be concerned. It wouldn't be a good idea if you're going to hold it for a short period of time. And so I think now's the time to kind of jump in and take advantage of those low interest rates. And that's probably why we're seeing a lot of movement right now.
I agree. And, I think there's a lot of factors at play. There's COVID that is driving the market. There's also the unemployment numbers that are kind of all over the place. And then, I think with applications right now, people are overwhelmed. Lenders are turning people away. And so, or it's taking a really, really long time for you to get your loan in process. So, definitely want to take advantage now versus waiting. I think they say that the rates should remain pretty low through the end of the year, but I feel like there's a lot more kind of involved as well. So you just don't know. So, look at this year.
Yeah.
What a year.
Yeah. So the wait is just due to the sheer volume of okay. Yeah. And that's surprising considering our unemployment.
Right.
We're going to take a little break, everybody. So thank you for being with us on Condo Insider. We'll be back in just a short break. And we have a question from an audience member that we will answer when we return. Thank you. Aloha and welcome back to Condo Insider. I'm here today with our lovely co-host Cheryl Franklin and our guest Kristina Steuer with Academy Mortgage. And you know, we have a question from an audience member, and I'm not sure if Kristina is really going to be the one to answer it, but I am going to pose this to you, Cheryl. Okay?
Sure.
So the question is, can a board member bring issues directly to the board, or does it need to be run by the property manager or CAM first, who will then present the issue to the board as a whole? And just some background, apparently this is a question from an existing board member, it sounds like. So what would you say the answer to that is?
It depends. Typically, I would say you would pose your question to the property manager and or the president, because outside of a board meeting, everybody is just John and Jane Doe homeowners. So you really shouldn't conduct business outside of a board meeting. You want to make sure that whatever your issues are on the agenda and discussed in open forum so that it's properly recorded. You don't want to get into the habit, or actually it's a potential liability, to discuss agenda items in between meetings amongst yourself. So to keep everybody above board and to make sure that everything is transparent, you do want to start either with the property manager and or the president. The president and the property manager should always be communicating anyway. So if you have an issue, it's not a good idea to discuss it outside of a board meeting with other board members. You want to make sure it's either on the agenda and discussed properly. So I would say start with your property manager or president.
Excellent. Thank you.
Sure.
Okay, now we're going to go back to asking Kristina some questions. Yay. You know, your intro went by so quickly. I'm not sure if we caught everything that you were saying at the beginning. So, did you have anything that you wanted to expand on that you had brought up?
Sure. So, you know, there's obviously I kind of went over the benefits of refinancing your home. Obviously, purchasing is a great time too right now to take advantage of those low rates. Whether you're doing a conventional loan or an FHA loan, or even for a VA loan, you know, for VA loans, it's really, really, really easy to refinance. So what we call those, it's called the VA interest rate reduction loan. And we, you know, don't need a lot of documentation. We obviously need some, but they go into the system a lot easier. So those, you know, if you're in the service or you have a VA loan, definitely take advantage of that. For the VA loans, we're seeing the rates as low as 2.875. So very big savings there. And then, you know, think about your goals. I think, you know, depending on what you have going on in your life or what the next few years look like, take advantage of the low rates by, you know, doing a cash out refinance. So if you've been living in the home for 10 plus years and you have, you know, $100,000 and you know that you have some kids going to college, or, you know, you have some student loans, or you have medical bills or really high interest credit cards, you know, we can roll that all together into the lower rate and do that kind of loan. So, you know, if you have any questions, I'm here to help anybody and put together some options. And so it's pretty cool, all the different things that you can do in the loan world.
I have a quick question.
Sure.
When you're qualifying someone based on a property that they want to purchase, and let's say, for example, that property is in distress, meaning it's going into foreclosure. There's an owner that, considering our unemployment rate, may have lost his job due to COVID. And my advice to them will always be, don't lose your home, sell it, right, to get some of the equity out of it. Do you consider that when buyers want to buy maybe a property? Does it change the process at all in terms
So
of?
are you thinking more like a short sale kind
Yeah.
of situation? I don't think it, you know, I think it would affect the inspection process to see if it would be worth us to do the lending for. But in terms of the actual loan, you know, it's a lot of the same process going into it. Yeah.
Okay.
Obviously, if the structure is crumbling and all of that.
Right. So it would depend on the inspection and things like that. You guys look at the big picture, typically, these are things that are all considered.
Definitely. And then one other thing I wanted to touch on, if you're a board member and you know that your building is going to be having, some major repairs in the next year or 2 years, and you know that you have a lot of people that are maybe on fixed incomes, it might be worth, putting something in your newsletter and encouraging people to refinance, because, when people come back and say, we don't have $3,000 for the lanais or for the roof project, when you hit them up for a special assessment, that's a good way to save some money there as an association. So,
I'm sorry. That's a
Oh,
good
go ahead.
point. And that's probably something, like you said, they should put in the newsletter, because I'm sure, it's going to come into play where at some point it's going to affect maintenance fees and whether or not they have the ability to collect them based on, the
Right.
economy and everything else. So
Yeah. So when we do the lending for condos, we normally need to ask some questions to the property manager. So we'll ask things such as the delinquency rate, which is obviously really important right now. We're hoping that everyone pays their maintenance fees, but
yeah.
It really depends on what area and, the building. And so we have to make sure that that's, in good standing. And then also there's no crazy pending litigation that is involving the structure or the health or the safety or anything like that. So obviously if there's some sort of, I guess, smaller litigations that are going on within the association, and that's not as bad. But and then also, if it's going to be an investment property, we need to know the owner occupancy ratio. So there's a lot of different things, and we rely on the property managers to provide that information before we even go ahead and order the condo docs and start the process. So
that's interesting to me. I'm wondering, when let's say you started the loan loan process or even refinancing process right before COVID started, and everything looks great, and then you lose your job, but this is before closing, right? So everything, I would imagine, because I know how tightly they watch everything up to the point of closing, that loan would then be rejected. Is that the case, or is that what would have happened at that time?
That's a good question.
Yeah, that's a good question. So I have a loan that we're working on, and the borrower was employed and everything was going great. And then Colina shut down. And so, the hotels keep saying, okay, we'll open in August, we'll open in September, and it keeps getting pushed. So basically, the loan is ready to go. It's basically sitting there. So once the borrower gets their job back, we can submit it back with a letter from the hotel stating that they're back open for business. So, as soon as we get the green light that they're returning to work, we can go ahead and push it back through. So, it's pretty.
I wonder industry-wide, I don't know if there's any statistics, and I didn't ask you to get these, but it would be interesting to know industry-wide how many of those were caught in the middle of that,
Right.
That kind of everything just stopped.
Mm-hmm.
And then the house that they're purchasing, is that seller, can they move forward and try to find another buyer, or are they contractually locked in to wait until that buyer, gets through this? Do either one of you guys know the answer to that?
I would think that they would have to, unfortunately, they would not be able to purchase that property. The one that I was kind of referring to was a refinance. So that one was a little,
oh yeah.
Then that's easy. But if there's a purchase and there's, the other side is waiting, I don't
more than likely
see them waiting for them.
They're more than likely they're going to lose that property, because the seller is not typically will not wait, for the buyer to, for everything to go through based on, when the back to work. So that deal, if they're buying, it would probably, they'd have to choose a different property once they go back to work.
Mm-hmm.
Okay, they would just move that they're still going through the qualification process. They would just lose that loan for the property they were originally interested in.
Yep.
Yeah. And maybe a cash buyer would sweep in, or somebody who still had their job and end up moving forward with it. Mm-hmm.
Yeah, we've actually seen that a little bit.
It's interesting, especially here in Hawaii versus the rest of, I mean, obviously people are getting laid off or furloughed nationwide, but we're so reliant on the tourism industry. And so, we have the tour companies that, are all closed and the hotels. And so everybody, is greatly affected here, I would say, versus the rest of the world or the rest of the United States.
Yeah, no, that's true. But what I'm also seeing, or I saw in the reports last month, is that we have movement from the mainland to Hawaii. I think on the last report, title report I saw, the bulk of them are coming from California. So a lot of our buyers are mainland buyers trying to, to move over from the mainland.
Are they doing a permanent residence or investment property or second homes? What is it primarily? Do you know?
It's primarily permanent residency.
Interesting. So they're most likely buying sight unseen then, or with videos or whatever form that they're seeing in. That's very interesting. So we'll have a big influx of people coming in. Yeah.
Right.
Wow.
And of course, you are familiar with, on the flip side of that, the vacation rentals are just getting slammed, and those owners, they're having a time trying to sell them, right? Because
we yes, on my branch we don't do vacation rentals, but our other two branches do, and it's just devastating. But you know what, you guys, believe it or not, we're at the end of the show. So and thank you so much. And my wonderful, lovely Cheryl, I will miss you on the show, but I'll see you anyway. And I wanted to let our audience know, next Thursday, August 6th, I'll be having a parliamentarian, Bruce Bishop, on the show, and he will be actually talking about some of the things similar to the question that we had as far as conducting meetings and all kinds of wonderful information. So please join us then. Thank you so much.
And call Kristina.
Yeah, call me. Thank you for having me.
You're welcome.